Bank of Canada just raised rates 0.75%. Why are they raising rates? And how is this going to affect the Toronto real estate market? Stay tuned to find out. So TREB just released the numbers for August 2022. So that's comparing August 2021 to August 2022. Sales were down 34.2%, which is actually up a little bit from July, so it's not as bad as it has been. And the rate of decline is slowing. New listings are down 0.7%, and active listings are up 62%, so that's a whopping huge number, right? For obvious reasons, demand is slowing. And prices are up almost 1%. Now that's August to August, but if you compare it to the market peak in February, they're down about 19% from the peak. And months of inventory are at about 2.4 months. That's actually down a little bit from July, but way up from the February of around 0.8. So this isn't really a surprising story. The Bank of Canada is raising rates to combat inflation, and it's making housing more unaffordable, and it's causing some uncertainty in the market. Importantly, the market isn't going down evenly across all product types. Condos aren't down as much as, say, detached houses in the 905, so it's important to note. So it does seem as if the sales trend decline, if that makes sense, is going down. So what analysts are saying is prices are probably leveling out. So listen, it has taken buyers and sellers some time to adjust. We're noticing much less bidding wars out there, and honestly, less of them are being priced for a bidding war now than before. Truthfully, buyers are coming back. All the buyers we're working with are showing a renewed interest in Toronto real estate. The Bank of Canada increased interest rates by 0.75%, and also indicated they may do another increase before the end of the year. And why did they do that when the rate of growth of inflation is coming down? It was significantly less in the month of July, and the economy is shrinking. So remember, the Bank of Canada is trying to manage inflation expectations. Basically, they're worried that pressure on wages will create a long-term inflation cycle, and that's what they're trying to avoid. So they are trying to convince us to stop spending, to stop buying stuff, hoping inflation will come down, and to give a sense that they're actually in control. So the Bank of Canada may have lost some credibility. They were too long in stopping the stimulus or even slowing it down. They were still doing it as of April of this year, and now they're really trying to course correct. Pundits and markets are really trying to decide, are they really just posturing, or are they really willing to drive us into a deep recession? How much higher will the rates go? It's hard to tell. It really depends on how the Bank of Canada interprets the data coming up. So Canada has a much higher debt ratio because we didn't delever in 2008 like the Americans did. So we're very sensitive to interest rate fluctuations, and over 50% of people use the variable rate when purchasing over the last year. And so that means that the amount they pay per month can change when these interest rates go up. And as mortgage roll over, payments are going to go up. So that's really going to affect the purchasing power Canadians have. So what's going to happen? Eventually, inflation will slow down. We will see a recession, probably some stagflation. That means inflation plus a recession. Interest rate rises will eventually stop. This may have been the last one. They may do a couple more before the end of the year. But, markets are forecasting that we're actually going to go down in 2023. The real estate market softening is slowing, if that makes sense. Meaning the market's kind of stabilizing a little bit. And listen, some people still need to buy houses, right? They still need places to live, and rents are up significantly. So, it's still a decent option to buy a home. GTA real estate is still structurally undersupplied. That's probably going to get worse as, condo builders switch from launching new projects to just finishing old ones. So, when demand does come back, the supply won't be there. So it is a great time to buy. A balanced market means less bidding wars, more opportunities to have conditions and offers, all the things we're used to when we have a balanced market. It may not be the best time to sell, I should say, but if you are upsizing, the relative value of a bigger property is down more than, say, selling a condo. So it's actually also a great time to upsize. Long term, we think real estate in Toronto is a safe bet. Population is growing, wages are growing, employment is growing. If you truly believe that stuff is not going to stop, then Toronto is a safe place to buy and hold real estate. So that's why we think getting in when the market is a bit soft is great. And hey, listen, maybe you do a variable rate and then fix when rates eventually come back down. So we hope you found that hugely helpful. If you have any questions, if you want to talk about real estate, shoot us an email, info@thinkto.ca. Please like this video and smash that subscribe button so you get updated on new content each and every week. Talk soon.